Hello, and welcome to the February edition of the ESG 5 and 5 podcast, a podcast in which we spend 5 minutes exploring a key ESG trend set to shape the market this month and beyond. I'm Jaspreet Singh from the Climate and ESG Capital Markets team, and in this podcast, I will explore some of the recent developments on what is arguably the EU's most stringent ESG law to date, the Corporate Sustainability Due Diligence Directive, also known as the CSDDD. In this podcast, I'll provide an overview on what the CSDDD is, run through a timeline of the key recent developments, and analyze what are the considerations for sustainable finance market participants. So firstly, what is the CSDDD? It is a piece of EU legislation that will require companies to conduct environmental and human rights due diligence in their value chains and oblige them to adopt a transition plan for climate change mitigation. Once enacted, it will apply after 3 years to companies in the EU that have more than 500 employees and a global turnover of 150 million euros. Companies headquartered outside the EU will be in scope if they have 150 million euros of turnover generated in the EU. Companies will need to identify adverse environmental and human rights impacts arising from their own operations, subsidiaries, and business relationships. If companies fail to comply and damage occurs as a result, they may be held liable and face financial penalties. This could be as much as 5% of a company's global turnover. So what have been some of the key recent developments? In December 23, described as a historic breakthrough, the Council of the EU and the European Parliament reached a provisional political agreement on the legislation. Then, on January 30th, 2024, the European Union then released the final draft of the CSDDD. The final draft initially appeared poised for easy approval. However, that support eroded following Germany's indication they would abstain from the vote. Germany itself has a similar national law and has been an important supporter of the EU legislation. However, the country's finance minister commented that the legislation would put a massive burden on companies without securing progress for human rights and the environment. Once Germany announced their no vote, multiple members joined in, both in public and behind closed doors, and it became clear that the European Council would be unable to get a majority vote in support. As a result, on February 9th, EU members decided to postpone the vote on approving the legislation. Looking ahead, the CSDDD is facing a ticking clock as the EU is set to hold elections in June this year. Approval within the European Parliament must go through the Legal Affairs Committee, with a final committee meeting scheduled for March 7th, setting an unofficial deadline. Clearly, a few obstacles remain for the CSDDD, but let's imagine a world where it comes into effect. What are the key considerations for sustainable finance market participants? For issuers and borrowers, the CSDDD includes a significant amount of work as companies report on the implementation of due diligence that considers human rights, climate change, and environmental impacts of business activities. The CSDDD expands the requirements of due diligence across the supply chain and value chain and specifies that adverse human rights and environmental impacts should be identified and mitigated. This is expected to influence treasury and finance functions on their management of suppliers. For investors and lenders, the implementation of the CSDDD by corporates would mean greater transparency and accountability for their portfolio companies. This could help investors and lenders better identify and manage ESG risk in their investment portfolios and loan books as it pertains to EU domiciled firms with particular relevance to those with large and complex supply chains. CSDDD also sets a mandatory requirement for corporates and financial institutions to publish climate transition plans. It hence potentially provides greater ability to align portfolios with 2050 net zero goals, leveraging information in the corporate transition plans. Thanks for listening to this month's Corporate ESG 5 and 5. If you like this episode, make sure to follow the channel and click the notification bell so you can get the future episodes as soon as they are released. Thanks again, and see you next time.